And welcome back to another episode of the Bull and The Cub podcast. I'm your host, David.
And I'm the co-host, also David, David's dad.
Hey, and welcome back to another Bull and The Cub podcast. And today we are going to be talking about what is a stock market crash.
Yeah, so explain that to me, David. What is a stock market? We don't ever want them to happen, but when they do, we want to be prepared for them. So what is a stock market crash?
Basically, a stock market crash is when the overall market drops more than 10% in a matter of few days, as opposed to bear markets when the stock market drops slower over a period of months or years.
Right, so crash, like you get a car crash, boom, something happens instantaneously.
It's basically very quick.
Right. Now fortunately, this doesn't happen too often. I mean, depending on kind of how you define stock market crash, I mean, over the last 100 years, we've only seen it happen a handful of times, right? Really, some really noteworthy ones in history. So let's talk about, I think what's interesting is we can see trends when you see some of the stock market crashes before, and because of those trends, you can kind of predict when they're going to happen again, because that's obviously what we're trying to do. We don't want to have a ton of money in the market if we think a crash we're going to come, right? So that we want to look at history to say, well, when has this happened before? So you want to talk about an example when we had one before?
Well, one example of when we had a stock market crash, this was a while ago, but in 1929, and then basically after significant growth in like the 1920s, because of like automobiles, airplanes, the telephone, like all of these different things, the entire overall market dropped 23% in 2 days and then continuously kept dropping.
Right, it grew because of those things, right? So you're right. We just this tremendous roaring 20s where all this stuff grew. We didn't have that much electricity in many areas back in the 20s. Electric grids created, you're right, cars, planes. And then when that bubble grew, eventually it grows so much that it kind of bursts. And what happens when the stock market starts to burst and starts to come down?
Well, it's like kind of a chain reaction. Some people start taking their money out, and then other people panic. They take their money out, and other people panic, and then they take their money out, so on. So it's like until people like stop and realize, oh, this is not as big a deal, and start slowly going back up, it's just gonna keep going down like that.
Right. It's panic sets in, right? And so we saw this again so another good example, a lot of folks listening or their parents listening remember 2008 banking crisis is another one where banks gave out a ton of loans to people, kind of high-risk loans, which led to this huge increase in housing prices because everybody was buying houses in the between 2002 and 2008, and all of a sudden people started defaulting on those loans, not paying them back, and so all the banks were losing tons of money. So now all of a sudden there's this giant panic. This also came after tremendous growth in the dot-com era. So you kind of had the housing boom, the dot-com boom. Everything's going up. The market's hot. Everybody's making lots of money. And then all of a sudden, it kind of got too big, and the bubble burst, and the stock market dropped 20% in a week. It's a lot of money to lose in 1 week. And again, both seem kind of interesting because both instances followed tremendous growth and then this massive crash when the bubble burst. It's kind of like you remember watching Mary Poppins? He tried to get the little boy to invest tuppence in the bank, and then what happens when the little boy gets upset and is like, "No, I don't want to. I want to use my tuppence to feed the birds." What happens then? Oh, I'm trying to see if you remember the movie. So after he doesn't give money to the bank, and he's critical of the bank, everybody listening freaks out and thinks the bank is trying to steal the little boy's money, and they all freak out and start wanting to take their money out of the bank, and all of a sudden everybody's pulling their money out of the bank, just like you talked about the chain reaction at the stock market. And so it's that panic that happens. So the lesson, now what do you think now? Do you think, we saw bubbles before, right? Do you think, some people think we're in an AI bubble, artificial intelligence, and everything's growing, everybody put money in the market, and are we at a danger of being in a bubble now that's about to burst? Or are we just starting the AI growth and we're going to continue to grow a lot more?
The thing is, and the AI thing, it's going to be happening for a lot more because, AI is just going to keep growing and grow. like some of these things they're gonna like eventually like stop being useful. But AI, it just keeps adapting. It's not gonna get old because they just make a new AI. Like imagine like iPhones. They make a new iPhone every year, so they're always adapting. And so it's always like a new thing, and like new model or whatever. So I feel like if it ever does stop working, it's gonna be in a very long time.
Yeah, you think we're far away from the burst? I tend to think you're right because when did ChatGPT come out? I mean, all this AI technology that's got excited. This is
Quite
really
recent.
yeah the last year or two. So we haven't had long enough period of time with AI technology for enough companies to use it for there to be this bubble growing from the AI generation. We've seen some good growth, but I think we're going to see a lot more before we get to the point of being worried about a burst. But we will be mindful of it. Okay, what are you ready? I think that's a good discussion today. Are you ready to recap our game?
Sure. I actually do not remember a game. What did you pick?
So last week I picked GoDaddy, and GoDaddy I was excited on the AI topic you brought up. They had the GoDaddy AI features, and that would enable more people to easily make the website of their dreams, and I thought that would attract more people to GoDaddy. Probably not something that's going to take off in a week. So I really saw no change in my stock. It started the week at 180, ended at 180, but I think it's a good stock going forward. I just couldn't really win a contest in a week. You had Amazon.
Amazon was quite interesting. It actually was going up and down quite a lot. Just the thing was, it landed at the exact same point, so there was actually no change, even though the entire time it was going up, down, up, down.
Right. So a tie this week, right? And I didn't think we had anybody who had done incredibly successful from our comments. So let's see how everybody does this week. But kind of a wash last week. Are you ready with your stock this week?
I'll let you go first.
You're gonna let me go first. Okay. So I haven't picked this stock yet. I don't think either of us have, even though in the past we've done well with this stock. But I'm gonna go with Tesla this week. Tesla has been, was historically over the last few years been a volatile stock. And it's been down significantly, really since that election boost it had after Trump won the election. And again, we don't get political here; we just analyze the market. But Tesla did really well right after Trump got elected, and then just proceeded to take a significant drop. I'm pulling it right now to see where it's at today. It's at $255 today, which is down $175 over the last 3 months.
The interesting thing is that's like almost the exact amount before like the spike. So it's like going back to the same point, just going like up and down. So you're trying to like find the right times to buy and sell.
Right, exactly. So it's down now compared to where it was. I think it's a good time to buy. And why? I mean, part of it is I think that you're just seeing some more news about really, again, not being political, but just seeing the influence and the benefit Elon Musk is having from being an integral part of the White House right now and of the government. He just had announcements of significant contracts being awarded for SpaceX from the military. And so I think you're just going to see these favorable things in the news for him. And again, whether that's a direct benefit to Tesla or not, I think there'll be a perceived benefit and people will be flocking to buy more Tesla stock. So I think it's going to be moving up. What about you, buddy? Do you have one for this week?
I feel like that's an interesting pick. And my pick, complete opposite direction. No clue why I chose this, but GameStop.
Oh, GameStop. Did Roaring Kitty tell you to pick it? So you're going with GameStop, which is at $25.41 at the moment. And let's take a look at GameStop real quick. So it's following your buy low mentality. It kind of peaked around over the last few months. January 7th, it was $33 a share. So $8 higher than it is now. So it is down a bit over the last few months. No particular reason other than, we do see long lines at GameStop these days.
The only really other reason why is because I've been like investing in GameStop a lot, and it's been doing well for me so far. Like I've bought at like $18, sold at 33. This was after like the market jumps. I was hoping they were gonna do another market jump, so I jumped in there. But still, like I feel like unless Roaring Kitty sells, there's like how many billion is it? It's like I think it's $1 billion. shares that Roy and Kay has invested, it's like crazy because unless they leave the market, I feel like the market for GameStop's always gonna be like safer.
Okay, I love it. I like the analogy, right? Or like the thought process. So Tesla for me, GameStop for you. We do it a percentage basis, so we'll see who's winning at the next episode. And if you have your own stock that you think is a hot stock to buy this week, put a comment in our chat or comment section under our YouTube channel. Otherwise, thanks for listening.
Yeah, we'll see you in the next one. Bye.